Ever stared at your crypto portfolio, seeing that number fluctuate, and then suddenly a chill runs down your spine as you think, wait, how much of this is actually mine after fees? If you've ever traded crypto, you know the feeling. Those seemingly small percentages can add up, turning what you thought was a decent gain into, well, less of a gain. And if you're a Canadian crypto enthusiast, chances are you've either used or considered using Newton. It's a popular platform, often lauded for its user-friendliness and competitive fee structure. But what exactly does competitive mean when it comes to Newton's transaction fees? Are they truly as low as they seem? And how do you navigate them to maximize your crypto holdings? Today, we're diving deep into the world of Newton crypto transaction fees. We're going to pull back the curtain, dissect every potential cost, and give you the full picture so you can make informed decisions and keep more of your hard-earned crypto. This isn't just about understanding what you pay, it's about understanding why you pay it and how you can optimize your strategy to reduce the impact of fees on your bottom line. Let's start with the big picture, Newton's philosophy on fees. Unlike many traditional exchanges that hit you with explicit trading commissions, Newton operates on a different model. Their primary revenue stream comes from what's known as the spread. Think of it like this: when you buy crypto, Newton sells it to you at a slightly higher price than they bought it for. When you sell, they buy it from you at a slightly lower price than they'll sell it for. That difference, the spread, is their profit. Now, this can be a bit of a double-edged sword. On one hand, it means you don't see a separate trading fee line item on your transaction history, which can feel transparent and straightforward. On the other hand, the spread is built into the price you see, so it's not always immediately obvious how much you're paying. Newton aims to keep these spreads competitive, often ranging from 0.5% to 0.7%, though they can fluctuate based on market conditions and asset liquidity. For highly liquid assets like Bitcoin and Ethereum, the spreads are generally tighter. For altcoins with lower trading volumes, you might see a slightly wider spread. The good news is, Newton states they have deep liquidity, meaning they can execute orders quickly and at competitive prices. This is crucial because a wide spread can significantly eat into your profits, especially on larger trades or frequent transactions. Beyond the spread, let's break down the other key fee categories you need to be aware of: deposits, withdrawals, and network fees. First up, deposits. This is where Newton truly shines. They pride themselves on offering zero funding fees for Canadian dollar (CAD) deposits. Whether you're using Interac e-Transfer, which is incredibly popular in Canada for its speed and convenience, or a wire transfer for larger sums, Newton doesn't charge you a dime to get your fiat currency onto the platform. This is a massive advantage compared to some other exchanges that might hit you with a percentage fee or a flat charge for deposits. For Interac e-Transfers, your funds typically appear in your Newton account within minutes, making it a quick and seamless process. Wire transfers, while free, can take a few business days to clear, so keep that in mind if you're in a hurry. They also offer crypto deposits, and naturally, there are no fees from Newton's side for receiving crypto from an external wallet. Next, let's talk about withdrawals. This is another area where Newton generally keeps things user-friendly. For fiat withdrawals to your bank account via Interac e-Transfer or direct bank transfer, Newton charges no fees. This is fantastic news, as many platforms will take a cut when you're trying to cash out your crypto profits. Interac e-Transfers for withdrawals are typically processed within a couple of hours, while direct deposits can take up to 5 business days. So, if you need your funds quickly, e-Transfer is usually the way to go. However, when it comes to crypto withdrawals, there's a crucial nuance: network fees. While Newton itself doesn't charge a withdrawal fee for crypto, you are responsible for the blockchain network fees, also known as gas fees on networks like Ethereum. These fees are not paid to Newton, they are paid to the network validators who process and secure your transaction. The cost of these network fees can vary wildly depending on network congestion and the specific cryptocurrency you're withdrawing. For example, withdrawing Ethereum during peak network activity can be significantly more expensive than withdrawing Litecoin or XRP. Here's where Newton steps in to help. They cover the first $5 of network fees for every crypto withdrawal. This is a pretty sweet deal, especially for smaller withdrawals or when network fees are low. If the network fee is less than $5, you pay nothing. If it's more than $5, you only pay the difference. For instance, if the network fee for your Bitcoin withdrawal is $8, Newton covers $5, and you pay the remaining $3. This subsidy can be a significant cost saver, especially if you're making frequent withdrawals. It's a key differentiator that sets Newton apart from many other exchanges. Always check the estimated network fee before confirming your withdrawal, as it will be displayed clearly on the transaction screen. This allows you to decide if the current network conditions are favorable for your withdrawal or if you should wait for a less congested time. So, to summarize the core fee structure. Trading fees, no explicit trading fees. Instead, Newton uses a spread built into the buy sell price, typically 0.5% to 0.7%. CAD deposit fees, $0, Interac e-transfer, wire transfer. CAD withdrawal fees, $0, Interac e-transfer, direct bank transfer. Crypto withdrawal fees, you pay network fees, but Newton covers the first $5. Now, let's talk about some less common, but still important, fee considerations, and how to optimize your transactions. One important aspect is staking rewards. Newton offers staking for certain cryptocurrencies like Ethereum, ETH, and Solana, SOL. While staking can be a great way to earn passive income on your crypto, Newton does deduct a percentage of the rewards as fees. For example, for Ethereum staking, Newton reportedly incurs a 15% Newton fee and a 10% validator fee on rewards. This means if you earn 0.5 ETH in staking rewards, a combined 25% of that would go towards fees. While it's not a direct transaction fee, it's a cost associated with the service Newton provides, and it's important to be aware of how it impacts your net staking gains. They do try to be transparent about these fees, displaying clear structures and reward rates on their platform. With that said, thanks for watching and until next time.